Hey, good morning, everyone. Starting almost on the dot here. Okay, so I had an investor ask me the other day what hard money is, and so I felt like I was failing as someone that sells investment real estate to the world, and if you don't know what hard money is. And so we really are going to get down just to the brass tacks of what hard money is. And you may or may have not heard this term, and if you're a seasoned investor listening, I might be preaching to the choir a little bit, but maybe I have some points that I can make that bring light, because I was on a call with my mentor this week, and he brought a couple things to light that I didn't even think of, and some angles on hard money. And so, as like an investor, and you're going to, the morning mastery calls that we're on is life, business, and health. And just because I'm a real estate guy and an entrepreneur, you're going to hear probably more about real estate than any other business and, life and health. And that's just kind of how it's going to be. So hopefully you're interested in real estate, and a lot of our listeners are real estate based. And if you're not, I'm here to coach you and help you become better at real estate. So you definitely need to have a goal of buying a rental or doing a flip this year. If you have nothing, even if you're currently doing it, or if you have plans in the future. So anyway, so we're going to talk about hard money. I've got a very special guest on the line. Her name is Laura Kirby, and she's actually a business partner of mine. I believe we have 4 businesses that we own together, and one of them is hard money, and we help investors. We facilitate that for investors, because everything I sell, guys, it's cash, and not everyone has $300,000 worth of cash just to put up to go flip properties or to buy a rental, and that's fine. And the reason why it's cash is because it's a distressed property. It's not a traditional transaction where you're, putting an inspection period on it and going to do an inspection and ask the seller. I mean, these sellers are in dire need to get rid of their house, and fast, because they're in a distressed situation because of death or debt or a divorce. They're in a dire situation, so they need to get rid of this house. And so, we come in as cash investors and offer them a lower price for their house, because their house, quite honestly, when they're in a distressed situation, is also a distressed house that needs a lot of work. So it makes a perfect opportunity for someone to come in and buy equity and buy undervalue and go in and put in the work. And that's so important as to growing your net worth, because you want to buy a distressed property, because even after you fix it, you still have equity in it. And every time you buy a distressed property that has equity in it, you are increasing your net worth. For instance, if you were to buy 10 houses this year, $100,000 under value, then guess what? You just increased your net worth $1 million this year. So you're now a millionaire this year. So, you might be thinking I'm crazy, like I can't just become a millionaire this year, but I see people do it time and time again, become a millionaire in 1 year with a really good game plan and just taking action in real estate. And so it's definitely possible. So with that being said, Laura, are you there?
Yes, I'm here.
Okay, awesome. Cool. So we're going to talk hard money. Like I said, Laura and I have a hard money company together that we help facilitate investors to get this hard money. So, Laura, I have my own opinion on why an investor uses hard money, and these guys listen to me talk enough. What, in your opinion, why would an investor want to use hard money?
That's a great question, but let me maybe back up just a little bit and explain what it is.
Yes.
And describe it so that your listeners can understand it.
Yes, thank you.
If many of your listeners are familiar with a 30-year mortgage, they understand that a 30-year loan gets paid off. It's a loan that gets paid off after 30 years. It usually gets sold to Fannie Freddie in the secondary market. In order for that approval for that loan to take place, they have to qualify based on their income, their credit, their assets. There's a lot of qualifications that take place. To close a 30-year mortgage, they have to go through a process. Usually that will take about 30 to 45 days to close. So it's a pretty extensive process in order for someone to acquire a regular mortgage, a regular 30, 15-year mortgage. On the flip side, with hard money, it's a private loan that is able to close very fast. So instead of us looking for pulling your credit, making sure that you have a specific credit or FICO score, making sure that you have enough income, enough assets, minimal debt, and all that, we are mostly underwriting, or in fact, only underwriting the loan based on the property and the collateral. So we're in a hard money loan, instead of pulling credit, calling your employer, verifying employment and income, looking at your tax returns, W-2s, bank statements, we don't do any of that. What we're really qualifying the loan is based on the property, based on how much collateral is in place. So if someone was to buy this distressed property, they are, let's just say a house that's worth $200,000, and that's how the value as it is right now. If it was fixed up, it would probably be worth maybe $250,000. But fortunately, because you are buying this at a wholesale off-market deal, you're probably getting the house maybe for $180,000, $150,000, something like that. So if your purchase price is hypothetically $150,000, and you want a hard money loan, meaning you want a private loan that wants to close fast without you having to qualify, what we're going to request is that you put a decent amount of money down so that it can close fast, and it's with the intent that it's going to be a fix and flip or a long-term rental, so a non-owner occupied property. And that loan is just, instead of being a 30-year loan, it's just going to be a 6-month loan, or it may be a 1-year loan. So most hard money companies are going to give you a very short term. Instead of 30 years, they're just going to give you 6 months as a way for you to pay that back. And there's basically called a balloon payment at the end of the 6 months, meaning when the 6 months is over, the balance of the loan needs to be paid off. And what that does is it buys you enough time as a buyer or investor to fix up the property and turn around and sell it, or fix it up, or turn around and refinance and pay it off. So a hard money loan is just a private loan that is qualifying the property instead of qualifying based on your qualifications as a borrower. So it's a very quick, rich loan, private loan that it's done, and we were able to fund that very quickly. Whereas if a normal funding would take about 30 days to close, we sometimes are able to do that in 24 hours. So
right.
That's hopefully that paints a picture of what a hard money loan is. It's just a quick loan specifically for investors, for non-owner occupied borrowers that are wanting to do a fix and flip, or that are wanting to buy the property so that they can refinance quickly and get out of that loan so that they can keep it in their rental portfolio.
Right. That's perfect. That was such a great explanation. Thank you so much, Laura. I really appreciate that. So that's what it is. The next question, which I jumped the gun a little bit, is why. And so I'll cover that a little bit, and then Laura can emphasize. So why would you get a hard money loan? So the reason is why is because as auction properties that we're going to be buying today at auction and paying for tomorrow, you have to pay cash. And sometimes your cash isn't all lined up and you don't have the cash to pay for it. So that's why people get hard money. And yes, we have the resources to, if you buy it today at auction, you put down a $10,000 non-refundable fee today, we've got to pay for it tomorrow cash. And so we can figure that out and help you do that if you're buying it at auction. And likewise, a lot of the wholesale properties close within the next, week to two, sometimes a day or two. And so that's why they're cash also. They're just so quick. So that's a little bit of the why. So another thing is there's savvy investors, yes, that are worth multi-millions and do extremely well in their flipping business that don't use their own cash. Even though they probably have, some of these guys, $5 or $10 million sitting in the bank account, they still don't use their cash. And the reason is because they are using their cash for other things that make them more money than they pay for the hard money. So for instance, you're probably paying anywhere from 12 to 18%, which is the hard money market rate on average in Arizona for hard money. And a lot of these savvy investors, they're able to make more, oddly, than 12 to 18% on other types of loans and businesses and other things. And so some of these investors, they're able to make 25, 30% on their money. So when they're paying 14%, why do it? It's same thing as like if I've got the cash to go buy a car and I can go get a 3 or 4 or 5% interest rate, why would I go pay cash for the car today when I know I can go make 10, 12, 13, 14, up to 30% on my money as being a savvy investor? So that's one of the reasons. The second reason would be the cash-on-cash return. If I were to go buy a $300,000 property and I flip it after all the expenses that I paid, and I make $30,000 on the $300,000, and I paid cash, $300,000 of my own cash, and I only made $30,000, what's my return? 10%, right? Simple. So I made a 10% cash-on-cash return. However, if I buy a $300,000 property and hard money gives me that $300,000, so keep in mind, hard money is not going to give you the full price. You need to have 10 to 20% of the purchase price plus your rehab money and fix-up money plus making those payments. But let me back up. So if I buy a $300,000 property, you put in $30,000 for hard money to get the property, and then you still made your $30,000 on that flip. Now what's your cash-on-cash return? I put in 30, I got 30 back. I'm making 100% return on my cash. And likewise, you are not risking your own cash. If the economy were to fall, if you needed cash for a quick rainy day, I mean, your cash is still in the money. There's something called OPM that as a real estate investor is so important. Other people's money. Use other people's money to grow your wealth. And so, yes, it's possible to grow your wealth without having cash or without having money in real estate. That's the great way and the awesome way, and that's what's awesome about real estate. Everyone thinks that you have to be a self-made or made millionaire to go make money in real estate. No, the fact is you don't have to have $1 to your name to go make money in real estate if you've got the correct tools and ways to do that. So that's a little bit of why. Laura, what else did I miss out on of why someone would use hard money?
Spencer, you touched on really great points and completely agree with that. I do believe that leveraging, and this is one of the big reasons why people use hard money, is what you're referring to, is if you have the option of having those, that $300,000 be used for a better return, or if you rather get a loan and leave that money in the bank or whatever your investment is, making you more money, then you might as well, get a hard money loan so that you can keep making a higher interest. The other thing is the ability to be able to close on a deal quickly. So if someone has a distressed property that they have been given the option to purchase, and it has to close quickly, maybe those funds might be in someone's money market accounts, stocks accounts. That might just take a little bit of time for those, or that 401k. It might just take some time for those funds to be out, and they need to close by tomorrow or this week. We are able to do and finish that transaction very quickly. So being able to have something that can close really fast, that's definitely another benefit of using hard money. The other thing is, even though it's a private loan, it's still a mortgage, and therefore, as you're making those mortgage payments, that mortgage interest is going to be a tax deduction to you, and you do get just a regular 1098, like you would from your regular mortgage company, showing the amount of interest that you paid at the end of the year. So there is that tax advantage of getting hard money as well. Let's see, as far as having flexibility, we do have amazing customer service, And so what most of our clients are repeat clients, so that it really shows that they are enjoying the service, that they are appreciating that what we say we do, and being able to close on time. And when we approve a loan, we actually close it. So we definitely have a ton of repeat customers because of the service that we offer. And I think we've covered pretty much all the reasons why you would. Oh, another interesting thing is we do have quite a few of our borrowers that might even have enough time to close on a property with, sometimes there's very few, but there's the occasional loans that might actually give them enough time to close with a regular 30-year loan. One of our advantages is that we are not dinging your credit because we're not pulling credit. So sometimes people appreciate that the hard money loan is not going to show up on your credit report. Even though you are personal guaranteeing the loan, it's not something that is showing on the credit report as a standard line or inquiry, or even when it closes, it doesn't show up as a debt. However, it is recorded with the county and so forth. But some people appreciate that it's not on the credit report either. Or they can close with their LLC. That's actually a benefit too, that you're buying a property, and if you have a company, you could actually have it under the company's name versus your personal name. So there's an array of benefits to doing hard money, and something that we're very familiar with. So.
Right. Thank you so much. So I'm going to close up. I know we're just a little bit after time, but that being said, another just point I have to touch base on is, the thing is, if I go and if I have $1 million cash in the bank and I want to buy $1 million flip, because I don't want to use hard money, it doesn't quite make sense, because guess what? I could go and buy and leverage. I could go do, because I'm leveraging and getting hard money, I could use that $1 million to go do 10 flips. And so that's another reason why, is because you can have multiple flips going on at the same time, because you're leveraging that cash that you do have. So I hope that helps you guys out. I really appreciate you listening in, and make sure to give me a subscribe and follow on my YouTube on the past videos. And Laura, thank you so much for your time today. I really appreciate you.
Yeah, no problem. And any other related hard money topics, happy to come back and explain.
Cool. Thanks, guys. Make it a great day. We'll see you.